Joining us, Mr. Vijay Valecha, Chief Investment Officer at Century Financial, is joining us to better discuss the latest figures on oil and gold. Now the war is over. Maybe we have seen and we are done with the geopolitical risk premium. Most of it is now finalized, and that was on June 23, 24. Ever since we are seeing prices ranging between 66 and 68 USD. However, the question is, what are we supposed to be keeping an eye on?
Well, majorly the most important thing to keep an eye on is the OPEC Plus. OPEC Plus will soon be announcing the new release, and whether the supply from OPEC Plus is going to increase going forward in this year or it's going to remain same, because there's hardly any chance that the OPEC Plus will be cutting supplies going forward. So if there's a release of higher supplies coming in from the OPEC Plus, we could see more pressure on oil on the downward side. However, it does look like the supply won't be increased by a large extent immediately and will have a much further forward guidance. So given that scenario, it does look like it will stabilize in the range over here before it takes off on one direction.
However, Mr. Vijay, according to these scenarios, the ones that you have mentioned and that are believed to be the most important in the future, today the bets are on possible seeing and for example $60. To what extent do you believe that we are going to go as low as 60, or shall we expect that this could change should the fundamentals on the market and the basics change?
Well, broadly we have seen oil to be trading in the range between 55 and 75 of late. This looks like a very, very logical trading range for oil for this year and probably even for next year. So once that we did break out of 75 last week, but that was purely because of market panic more than actual fundamental reasons of oil moving upwards. We have seen a 75 range to actually hold on the upside and 55 to hold on the downside. So 50 might be an overstretch, but yes, 55, 60 does look like a possibility that we might see. That range should continue, so we might see those dips and we might see those highs again from those 55, 60 levels.
Let me now move to precious metals, Mr. Vijay, and gold, which is now increasing again over the past 2 days. Knowing that it had encountered some difficulties in the past despite all the geopolitical risks, and we fear that it could reach new highs. Some we're seeing that the rally on gold is over on the short and medium term. Others are still expecting high figures exceeding, of course, the current record high. For example, Ed Yardini is expecting $4,000 in the near future. What's your reading on this?
Well, we also do believe that $4,000 on gold this year is very much possible. However, in the short to medium term range, we do expect that gold has hit a roadblock right now, the 3,500 levels. So we might see a consolidation phase, because we have seen the first 3 months of the year gold being extremely bullish and unidirectional. So we might see a consolidation range here between the 3,300 and the 3,500. We might go down as much as 3,200 also, but I don't expect gold to become bearish at any point of the year. At the same time, we expect the last quarter of the year where the rally will again pick up, and we feel that 4,000 is definitely touchable this year.
Thank you very much, Mr. Vijay Valecha, Chief Investment Officer at Century Financial. Thank you.
Thank you so much.